Hello and welcome to ABC Bullion's 360 monthly review. My name's Bronson Checky. I'm joined by Nick Frappell, Global General Manager at ABC Bullion. Welcome, Nick.
Hello, Ron.
Gold's had a really constructive month and pushing up to 1800. It's come off a little bit last night. What's the sort of longer term sort of view for it at this stage?
Well, longer term view is still bullish for sure, and it's probably worth addressing a couple of things around why it's perhaps why it's come back a little bit. Had a great close to the quarter, which I think was important, especially for the funds, and also
that all important sort of monthly or quarterly percentage gain. That's
exactly.
Pretty much any figure people look at, really.
Yeah, it's important, and we've had that. The other thing is as well is that some of the option strikes that were falling due around about 775 and so on, they've dropped away. So some of the gamma trading around that has also fallen away, and the market's sort of clearly entered a slight vacuum there, sort of going past the month end.
Right.
And so perhaps not surprising, talking with a few people in the market yesterday, they were like, this looks like it could stall.
It needs to breathe. The market needs to take a breath.
Well, that's also true. It never goes up in a straight line.
I see a lot of investors. They always sort of see the hope for more and more highs, but the market's just like you've got to breathe in and out.
Moves in waves. Yeah,
moves in
exactly.
waves. So it takes.
And also, 1800 itself is a really big number. So even if it doesn't really mean anything in practice, it does mean something because people see that and think, oh, okay, I've got to get past 1800.
Yeah.
Other thing as well is that we had this really big surge of managed money buying, which was reported in the CFTC. It comes out every Tuesday, as we often talk about, and we had something like 18 or 19% increase in managed money longs, which I think we referred to in the conversation on Monday.
Yeah.
Just looking at the change in open interest since then, you can't directly see the flows in or out, but you can see the change in open interest. Given that the price has gone up a bit more since then, open interest hasn't really increased that much. So what it might have been is that actually shorts were getting out. Right. And once those shorts, some of those shorts have got out, that's an element of buying that's gone.
Sure. Yeah. So also ETFs they've been booking quite big gains.
Yes.
So that's also positive as well.
Very much so. Yeah. Yes.
The silver price has been lagging. It's got under that 100 ratio, but it's still struggling.
It's not doing anything. It hasn't really set out any new ground since perhaps the last time we talked about silver. It's bullish. Technically, it's bullish. It's above the weekly cloud. That's positive. And the price action has created a few more targets up to sort of $23 and so on. That's pretty good. If you step back and you look at it from big picture, where we're at now is sort of near the top of the range of the last three and a half years, I guess. Yeah. So you could see people who say, well, okay, if we're going to trade that range, this is where I'd quite happily sell it. Yeah. So there's definitely two ways of interpreting it.
And it takes a lot for the market to get through that sort of, if there is a nice tight range, it's obviously sell here, buy here. And
absolutely.
Something to trigger it out. So Nick, the Australian exchange rate obviously affects our local investors quite a bit. Where do you see that for the month ahead?
Aussie's doing well. It's still got that tailwind, strong exports helped by coronavirus issues elsewhere. It's trading around about 69 today. So from visual memory, that's still being capped by the weekly cloud. The thing is that it's been capped for the last month and it keeps on trying. So I wonder if it will actually get through on the fifth attempt, fifth or sixth attempt, and then pop higher. I see the next resistance around 0.7135. That's pretty close, so maybe it's not a very exciting move higher. Yeah. I'm still minded to think that 0.7135 is where the Aussie would find a natural pause.
Right.
But if you look at it in the short term, it's got this tailwind. That's great. If you look at it in the longer term, if coronavirus and so on and so forth, global demand shrinks over the next, say, 3 to 6 months, my natural inclination is to think the Aussie should weaken off again.
Yep. Okay, that's good. Just news that came out was CME announcing that they're going to offer sort of London as a delivery location for their 400-ounce contract, which I think raises an interesting question about, New York versus sort of London, and also I suppose the concept of location difference, because
Yes.
the market always treats gold in different locations as different
Yeah.
pricing slightly.
Yes.
I mean, does that break that open, and what's the implications for the London market?
Well, it really depends on the uptake for this 400-ounce contract. I don't think there's been a lot of uptake so far.
No.
I may have missed something there, but I don't think there has been much uptake. So if there continues to be relatively low interest in the sort of 400-ounce kind of 3-warrant version, then I sort of think it's not going to make a huge difference. The CME launched what looked like a really appropriate contract about 5 years ago, I think. CGK, which was Kila Bars in Hong Kong, one of the world's great physical hubs, going full speed ahead at that time.
Yeah.
There didn't seem to be a lot of take up on that, and that really looked like a contract which had everything going for it. I'm just not sure actually what it means and whether it will see take up. I think the best thing is to see how the market itself responds and really what users do with it. I think in terms of sort of London, New York, it's still not an OTC contract in the sense that its price is linked to the active month.
Yes. Yeah.
So it's still going to be related locationally, and all those price issues, premium and so on, traditionally, it's going to be related to the fact that it's a futures contract.
But I mean, there has obviously been a lot of attempts by different markets, as you mentioned. I mean, the CME's been quite expansionary.
Yes.
The Kilo Bar contract in Hong Kong was an attempt to expand out. And I mean, is the CME using this coronavirus and the dislocation to sort of say, okay, well, this is a great excuse to sort of get a location London futures contract and try and, I mean, the LME tried it with a gold forward, which hasn't picked up volume.
Yes.
Is this sort of just part of this sort of testing of different locations and markets where they're trying to get dominance in the gold market? Or?
Well, I think maybe to look at it in reverse order, I think one of the things is the LME has a lot of participants in it, where you've got base metals people who actually need gold and silver pricing. And the LME thought, probably quite reasonably, that, well, why don't we give them an option to do stuff where they do, I don't know, third Wednesday gold, and that can go along with their, I don't know, third Wednesday copper and, zinc and so on. And they could sort of bundle all of that and maybe face, ameliorate their margin calls and all of that kind of thing. So that made sense, and probably those users maybe are coming from that base side angle, perhaps. I think with the CME, to me, this is more of a response to the rather kind of violent moves in the EFP. I don't think it's necessarily
trying to get a foot in the door to
territorial.
London.
I don't think it's necessarily territorial in that sense. But
I mean, the regulators have been trying to push more for centrally cleared and exchange traded contracts. So there's obviously the LME and the CME. It's part of that. I mean, can OTC London and that sort of classic, principal to principal market survive this sort of regulatory push?
Absolutely. Because the thing is that those central clearing parties have been a feature for some while. So if you do, let's say, a 3-year forward with, sort of interdealer, you can actually put that on the centrally cleared platform. So that's already something that's there. That's all worked really well, although that was a response to the banking and systemic risk in GFC, and this is slightly going off-piste. But I remember at the time, it was obviously a way of trying to make things better, but you do always risk that you always have the possibility that you just bucket your risk somewhere else, somewhere differently, and that you put the strain on the CCP rather than the bank system. Good thing is CCP is generally easier to monitor and more transparent. But,
you mentioned Hong Kong, and I mean, with all the stuff that's going on there, and China sort of changing the law and all of that around there. I mean, Hong Kong as a location for physical gold, I mean, is it going to lose its position? Because it always was a big hub. Has Singapore got a chance to pull and become that sort of Asian hub? Or do you think Hong Kong can survive as a gold location?
I think it will definitely survive. I think that Singapore has a more coherent policy around trying to promote gold and promote itself as a physical trading hub. So it definitely has the energy and the desire to do that.
Yeah.
And in a sort of a relationship between sort of the banking sector, private sector, if you like,
Yeah.
and the government agencies like MAS and so on. So Singapore's definitely, I'm sure it's thinking that way and planning for the future.
Yeah.
Certainly hope that Hong Kong remains the gigantic hub that it is.
Yeah.
But yeah, it's the thing is, talking about Hong Kong and talking about China, is China's sort of kind of on the back foot anyway with gold at the moment, because this latest increase in coronavirus in Beijing has actually pushed sort of loco China gold back into a steep discount.
Yeah.
So that's kind of what we're, not necessarily Hong Kong related, but it'll impact Hong Kong as well.
Okay, interesting. Thanks, Nick. Stay in touch with markets by following us on our social channels as well as at abcbullion.com. Thank you. Until next time.
Thank you.